Hi, how you doing? My name is Steve Houston, and you know that. If you've already been in my channel before, this is where we talk about mortgage protection, final expense, really all things financial services, as in you and I working together with an IMO. And on this channel, we discuss the facts, and I allow you to decide what's in your best interest. This week, well, today actually, it's Valentine's Day. So some of you might be asking, what does the law of large numbers have to do with me? Well, if you're working with these IMOs and you're working a lead program, you need to understand the numbers. And so how do you have confidence and how do you remove the fear of participating in a lead program? It's by understanding the law of large numbers. And we're going to go through that on this video right here, right now. All right, well, fantastic. I got my pen, my board, and I'm going to go through some numbers here. So how does the law of large numbers affect you and I? It's simple. As long as you know and understand and you're dealing with some good data and you understand what the numbers are in this business, it removes the fear and going broke in buying leads. Now, all this is depending on the fact that you're dealing with an IMO that has a high quality lead program. And I discussed that on a couple of my videos. Beef patties and mortgage protection up here is a good one to take a look at so you understand the whole concept behind leads. So as long as you're working with an IMO that has a high quality lead program, what I mean by high quality is that two things. The IMO is not recycling or redating that lead. In other words, it gets really old, they redate it and they put it back to the front again. So why does all this matter? Well, it matters because it allows you and I to determine our cash flow. It gives us kind of a basis point of which to remove the fear from buying or participating in a lead program. If we know what the average number is, and that number is generated by law of large numbers. In other words, we're looking at some data. In our example at our IMO, we've generated 100,000 leads. We protected somewhere between 35 and 37,000 families over about 1,000 agents. So we have a pretty good idea what the closing ratio is on our brand new fresh leads. We also know what the average APV is, or the average application or policy, right? And I'll go into that in a second. But as long as we understand these numbers and their average numbers, you might be above average and you might be below average, but you have a basis from which to start. And then from there, you can adjust the amount of money you spend. The important thing about this whole industry is there's value in a leads-based sales opportunity, right? I get this question all the time. And I would much rather be involved in an IMO that produces a high quality lead program backed by world-class technology that removes that lead from the system if it's ever bought a product before, so you and I are not spending our money on a sale we can't close, right? They don't recycle or redate the lead, so if I'm buying a brand new lead, I want to know it's brand new. I don't want it to be 6 years down the road and they redate it and put it back in front again and sell it to me for the top dollar price. I don't mind buying older leads. I've said this before in other videos, but I want to pay the right price for that older lead. So again, it has to be a high quality lead generated by their interest level in mortgage protection or final expense, right? And you know there's other companies out there that generate leads for a free trip to Cabo, a free trip to Hawaii, a free car, or a child safety kit. And I'm not going to name any names, but they're out there. And so what you and I do is we're running around on these appointments on leads that we pay for, and they never really had an interest in our product. They wanted the free child safety kit, free trip to Cabo, or they wanted a chance to win that new car, right? That's not a high quality lead program. Now, inside of our industry, there are other IMOs that produce a mortgage protection final expense lead. They at one time were interested in the products we had to sell. However, some of those IMOs play games with the recycling and redating. But getting past all of that, and you and I can have that conversation offline. Give me a call, give me an email, give me a text, whatever you want to do, and we'll discuss it because there are some variances. And the important thing about it is for you to survive in this business and cash flow yourself properly, have a good work ethic, burning desire to succeed, and to be coachable. Be with an IMO that doesn't operate like a network marketing company. You have training and support. And I can't get into that because it's a whole different thing, but it does make a difference because it comes down to you and I being able to make solid choices that allow us to stay in the business by cash flowing our business properly. We are in business for ourselves, so like any other business, we have to pay for advertising. In this case, the IMOs do the advertising for us, right? They send out thousands of letters and they get 1 or 2 out of 100 back. And we had the privilege of buying the 1 or 2, not the 99 that were thrown away. So those still cost money, but they didn't cost you and I any money. So there is power in the lead program, and I would recommend everybody getting on a lead program with an IMO that has, again, a high quality lead with world-class technology to back it up. But again, how do you remove the fear, or how do you cash flow yourself in this business so you don't put yourself out of business by spending too much money and buying the wrong leads initially? It's by these law of large numbers. It's by understanding what these numbers mean. We know that the average closing ratio is 32%. And hopefully you can see this, right? 32%, all right? And we know that the placement ratio is about 77%, right? And why is that important? Well, if you're gonna close basically a little over 1.5 sales for every 4 leads you buy, let's say you buy 4 leads, you're gonna have a 32% closing ratio. It means you're gonna write 1 app basically out of 4 leads, right? 77% closing ratio comes into play because you need to know how many are you going to lose after you write them, because there is an underwriting process. You're going to get paid on about 7 out of 10 that you write. You're going to lose about 30% of them in underwriting, right? So out of 4 sales, let's just say you go out and buy 12 leads, you close 4 sales. Out of the 4 sales, you're going to lose 1, get paid on 3. So how's that? Understanding that, how does that break down to benefit you and I and how we make our decisions, right? And there's also about a 13%, let's just say a 13% chargeback, meaning out of 100% of your sales, 13 might cancel before your 1 year is up. Now, you and I get paid what they call an advance commission. So before I get ahead of myself, let's go back to this. So let's just say 32% is your average closing ratio. Now, you could be 25%, you might be 50%. 32% is a good number. It's a good solid number. In the home, you should be closing 70 to 80% minimum. Okay, now you might start out being bad. We all do, and that's okay. That's how you learn. But you shouldn't be starting out bad paying top dollar for leads. Again, it comes down to coaching and who your coach is. The only difference should be in brand new leads and older leads is the amount of leads you need to set the same number of appointments. So if you're looking to get 10 appointments a week, if you're working brand new leads, you won't need as many leads to set 10 appointments, which is about the average for a part-time individual. You should be working about 10 appointments per week. If you're working older leads, let's say they're 5 weeks to 10 weeks old or so, you're going to need twice or maybe 3 times as many leads to get the same number of appointments. You're just going to have to work harder. Doesn't mean you can't close them. That lead is older, still hasn't bought a product most likely. It would have been removed from the system as long as we're talking about agents in your IMO, right? So somebody else in my IMO got that same lead as an A lead and didn't sell it. It goes to what we call a B lead. It wouldn't be a B lead if the agent that got it as an A lead had sold it a product, because it should be removed. Now, again, not everybody works that way, and that's the challenge for you and I. You need to decide where is the best place for you to hang your hat, so to speak, right? So let's go back to this. So we know that the 32% is the average closing ratio. So what is the average sale? Well, the average sale is 1,000. Let me see if I can write this big. $1,082 annual or APV. Forgive me if you can't read that, because I can't tell if the camera can see it until I get done. So it's trial and error, folks, but hopefully you can take notes. So 1,082, which to your client is $85 a month. Right? So how you get this APV, and this is how you and I are paid, is the client's monthly payment for the insurance times it by 12 gets you this number right here, an average of 1,082. Now, if you're on a 70% contract, right? So you would get paid 70% of this number, and all IMOs, at least most of the IMOs that I know of, will give you a 75% advance. Right? I'm going to go through this with you in just a second. So to kind of back up, because I want to make sure you get this. This is a very, very important video, because if you understand this, your income becomes predictable, it becomes predetermined, and then you can scale your income. This is so important for you to get this, right? So you get paid 70% when the policy is issued and put in place, okay? And that 70%, let's just say it's roughly $700. Of that $700, you're going to get 75% of that deposited in your bank account the very next day, which is this point right here, 75% advanced, right? So you get $480 to $500 deposited in your bank account the moment this policy is approved, right? Now you understand that. So if you made 1 sale out of 4, which is a 32% ratio, let's say you bought 4 leads, closed 1, okay? And there's a kicker to that too. I want you to understand that, and I hope I don't forget it. So that sale would be $1,000 APV on average, right? Could be a little higher, could be a little lower, depending on your geographic area, and also depends on the home values, right? Right, but we're taking a national average. I believe in real numbers, no fluff zone, right? You're gonna get paid about $700, right? So you spent $120, and you got $700 back, $500 deposit in your bank account. You're $400 to the good minimum, right? Now, if you can spend 120 and make 700, because again, only you're getting advanced to 75%, but the remaining 25%, it's an important number to actually talk about. The remaining 25% is in reserve, right? The insurance company works on averages, right? So they know what the average policy stays on the book. The average policy stays on the book 9 months, right? So they're willing to pay you and I 9 months advance, right? They're holding back 25% in the event that you wrote a policy that was average and the policy cancels out month 10th. There'd be no chargeback. Remember, it's the chargeback ratio right here. The chargeback ratio on average is 13%. You'd be past the chargeback ratio if it canceled in month 10 because you get paid on 9 months, right? But what happens if it doesn't charge back and they pay? They're going to pay you the remaining 25% in month 10, 11, and 12, what we call as earned, right? So in month 10th month, you get a portion of this 25% back. Every time they make a payment, they're going to pay you again. Month 11, month 12, and now you've got 100% of your original 70% contract rate, right? So if the original amount was 700 and you get paid, I'm just using rough numbers here, but let's just say you got $500 up front, they're going to pay the remaining $200 to you over 3 months. So what is that? That's about $70 a month, roughly. So in month 10th, you get you get $70. In month 11, you get $70. In month 12, you get $70, assuming that the policy is still on the books, right? And that's how this whole industry works, okay? Right, so if you understand these numbers, now you can predict your income based on your closing ratio. I don't want to make this complicated. It's not that complicated, and it's actually empowering if you understand the numbers. So if you get, again, it's going to vary based on how fresh the leads are. Remember, I told you that. If you're working A leads, you got B leads, C leads, right? And you want to get 10 appointments, you may only need 15 leads, right? By 15 of the most expensive leads there are. I would not do that starting out. I'm just using this as an example, right? If you're working B leads and you want 10 appointments, you may have to buy 50 leads, right? If you're working C leads, now all IMOs have different variations, but let's just say it's level 1, level 2, level 3 as they go down their price sheet. And every A is brand new, fresh. B is a little older. C is even older, right? C leads in most IMOs is 10 months or longer older. Again, going back to the high quality thing, right? So if you want to set 10 appointments, you're working C leads, you may have to buy 150 leads, right? And so you can still set the same number of appointments and make the same amount of sales, because once you book the appointment, I believe that if they let you in the home, your closing ratio in the home should be the same no matter how old the lead is. How does this matter to you and I, right? Now you know what the average closing ratio is for a brand new fresh lead. This is very important to understand that you can buy older leads and make sales from those older leads. So that's how you start out. Okay, so now you say, okay, Steve, I got all the information. I know that if I buy 4 leads, the average closing ratio is 32%. I'm going to make 1 sale for every 4 leads I buy. As long as I'm assuming I'm buying A leads, I'm working with a high quality IMO with world-class technology platform, so the lead I know is brand new, fresh, or at least if I'm buying it at a B lead, I know one other agent has it, or I'm buying it at a C lead, 2 other agents have it. I got all that, and I'm with the right IMO. So now, how do I determine my income? How can I scale my income? And how can I make my income predetermined? Good question. I'm glad you asked, right? So let's work out what we call a 10-6-3 program, right? 10, 6, 3. Now, what does that mean? It means we're going to buy 10 leads. We're going to set 6 appointments. Whoops. This is very difficult. We're going to close 3 sales. Okay? That's what I tell my people. That's it's really more of a part-time job. Okay? You should be able to run 6 appointments in 2 nights a week. Okay, you're going to set 10, you're going to buy 10 leads, you're going to set 6 appointments, and you're going to close 3 sales, right? So what does that mean to you in income? Okay, I'm glad you asked that too. Let's talk about that. So we know the average APV is what? We said it earlier, was $1,082, okay? $1,082, okay? We said we were going to close 3 sales, so 3 sales at $1,082 would be $3,046. Assuming that we're at 7%, we're going to assume that we sold a non-medical policy here at a full contract rate and a commission rate of 70%, right? Okay, so our commission is at $2,272. We're going to get paid 75% of that. Remember, we talked about it before, actually, on the other page. We talked about it before. We get paid 75% of that advance. So what is that number? That number would be $1,704. Okay, this is going to be 75% advanced, $1,704, right? Okay, so, and then what else are our costs? Well, first let's write down the reserve. Is 25%, which is going to make these two numbers 100% of our commission. So our reserve would be $568, right? We have lead cost, right? So our lead cost, let's just say we bought 10 leads. So our lead cost would be $410, right? So that's how it works out. So we made 3 sales at $1,082, which is the average application, $3,046. We're going to get paid 70% of that because we sold our IMO's core product, which is $2,272. We're going to get paid 75% up front, which is $1,704. We haven't lost the $568, so we want to make sure that's calculated back into our earnings. And then we're going to take out our lead cost. So what is our net? Well, our net is $1,868 is our net. It's after lead cost. If I'm working a 10-6-3 program, which is part-time, I buy 10 leads, I set 6 appointments, and I close 3. What is that assuming? That's assuming you're working on a 50% closing ratio. Now, you might be at 25%. It means you might close 2, right? But let's just take the numbers as they are. So we close 3, that's 3,046, 70% would be 2,272. We're going to deposit in our bank account the day the policy is issued and paid, $1,704. 25% is going to be withheld. We already removed that from 2,272, but we have to add it back in because it really is, we still get the income, but we get paid that in months 10th, 11th, and 12th, right? Lead cost is a negative, $410. We're going to net out $1,868. We're going to work 2 nights a week to do that, right? Let's say Monday. I always work my Monday and Tuesdays. It's for me, and I use Wednesdays as a rollover day. So in 2 days, I'm going to make $1,868. So the whole purpose of this video is, if you understand that, it removes the fear of buying leads. Now, like I said, everybody has their own ratios. You might be below average, you might be above average, but you can get to above average. You can at least get to average, and these are average numbers, and that's what we do on this channel. We talk about numbers that are real, not inflated, no hype. We're talking about real stuff. So let's talk about full-time. Let's just say you want to do this business full-time, or you want to start out part-time and move to full-time. What does full-time look like? Okay, let's go 15, 10, and 6. So we're going to set 10 appointments, and we're going to close 6 sales. So what does that look like? Well, if we close 6 sales, again, the average sale is what? The average sale is $1,082, so that puts us at what? $6,492, right? Okay, same thing. We're working on the 70% closing ratio, assuming you haven't been promoted yet. That would be $45.44. $45.44.46. That's again at 70%. Okay, so $45.44.46, right? And now we have a 25% holdback, just like we did on the part-time effort. And we did that before, and that would be $1,136. Sorry, $36, and that's why people use a whiteboard. $36.44. Okay, that it would be your 25%. So less lead cost. So we bought 15 leads. So let's just say that's roughly $600, $615. Okay, That's the only negative, right? And so let's see, we made 6,492. We get 45, 44, 46. We had $1,336 held back, but this is what we're going to get paid advance right here. Remember, this is month 11th, 12, and 10, 11, and 12. Okay, and then this is our lead cost. What is our net? Our net is $39.82.44. So $615 is what we have for lead costs. So again, if you're working full time and once you get your closing ratios that are predictable, then you can scale your income. If you want to make more money, get more leads, make more dials, book more appointments, see more families, you know what to expect because we gave you the law of large numbers. We know what an average is. Now we have to determine what your average is. And let's say you're at 60% or you're at 30%. So you don't close 6 sales, maybe you close 5 sales. And you can rework the numbers and you can figure it out pretty quickly what you should be earning on average. So as you invest in your business by working the lead program, pretty good, predictable information to go by. And you adjust it up and down based on your skills. And as you do more of this, your skills improve and the lead program becomes even more beneficial to you and I, because I know if I buy 10 leads, I'm going to book 6 to 8 appointments and I'm going to close 3 to 5 applications. And remember, 1 lead usually leads to 2 sales. You're going to meet with couples and they're both going to want a policy, right? So it's 1 lead, but 2 sales. And again, I asked if you could spend $600 in marketing, we still have to get ourselves in front of clients. So you can knock on doors, you can work the friends, family, and neighbor program, or you can work a lead program with a great IMO that has integrity and a high quality lead program backed by world-class technology. And if you want to know one, full disclaimer here, we're building a nationwide agency, but I'm more than happy, and I do it every day, to talk to anybody about this industry and see if I can help you along, regardless of whether or not you are a fit for our agency or we work together, okay? If we determine that's beneficial for you and for me, love to have you. So the point of this channel is I can help everybody in this business succeed, because I don't know of any business out there where you can come in here with basically very little money, very little skills, learn a few basic things, right? Look, here's how it works. We go see people that have asked for us to go see them. We're not cold calling, we're not knocking on doors, and we're not going through the phone book, right? When we call, they know who we are, they know what we do, they know what we have, and they're interested in it. They fill out a form and mail it back in, right? So no door knocking. So we spend our time kneecap to kneecap in people's homes with people that are interested. Does that mean that they're all going to buy? No. I got 15 leads. I booked 10 appointments. I closed 6. So half of them I didn't sell, even though they had interest, right? So we don't need them all to buy. We just need to know what the averages are so we can predict our income and base our investment into our leads on the numbers. You should have no fear of participating in a lead program as long as you will a high-quality lead program with a high-quality IMO. So you want to make $500 a month, you can do that. You want to make $5,000 a month, you can do that. You want to make $20,000 a month, you can do that. It's simply figuring out what the numbers are, what your ratio is, and making sure you understand it. At the end of the day, it's all about cash flow, cash flowing your business carefully, understanding what your numbers are. Spend wisely up front until you understand what that number really is. So hopefully this video made sense to you and really helps you out a lot. Once you know the law of large numbers and once you know closing ratio on your fresh leads, it should remove the fear from you buying leads. Now, again, you're in business for yourself. Buying leads is an investment. Let's say, for example, a carpet cleaner. Look, a carpet cleaner typically works out of his home just like you and I do. The only way he's going to get clients to find him is not by going to his house. He has to run coupons, internet advertising. He has to spend money before he can make money, right? Same thing applies here. You're going to want to have a budget to invest. Start out small. Don't start out buying the brand new fresh leads. Cash flow your business is key. Cash flow is king. And because it allows you some time to figure out where you need to work on your presentation, where you need to work on your closing skills. It gives you time to learn the business. Once you figure out what your number is, the better you get, the better that number becomes, and you can move into a fresh leads on a regular basis, and then you can be hitting numbers like this, right? Okay, that's it for this week. I hope you enjoyed the video. Remember, do me a favor, smash the bell below. That gives you instant notifications. If we're doing some live feeds or whatever, you're going to be notified instantly. Hit the subscribe button. I would appreciate it. And I'd love to hear your comments. I get people emailing me all the time telling me how they got something out of the videos, but you don't make the comments below. So do me a favor, make the comments below. It helps the channel, helps other agents. It gets a dialogue going on between you and I. And then, of course, certainly reach out to me on text, email, or give me a... I don't know where else you can go with very little money, very little skill level, knowing nothing about the business, getting yourself a license, getting coached by the proper coach that knows and been around this business for a long time. I'm not talking about a year or 2 years. I'm talking about 25 or 30 years. And can show you the ropes, and then in your first year make 6 figures, and then every year for that make multiple 6 figures with very little investment. All it takes is you being coachable, willing to work, have a burning desire to succeed. So I hope the video helped you out. Thank you very much. Again, make sure you hit the subscribe button, hit the bell for instant notification, and I'd love to hear back from you. Bye-bye now.